Alphabet has announced its first ever dividend alongside an impressive earnings report, signaling a new chapter for the tech giant. Let's take a look. Welcome back, guys. We're here to talk about another earnings release this week. Alphabet stock reported last night, and they got a much-needed win from its first quarter earnings report. Shares are up more than 11% in pre-market trading after the tech giant announced its first ever dividend, and they did expand their share buyback program to $70 billion. Tell us more about this news.
Yeah, so Alphabet, delivered a great earnings report, beat on the top and bottom lines. They raised their guidance. And as you pointed out, two of the biggest things that drew investors' attention was they announced their first ever dividend at 20 cents a share per quarter, and also that they were increasing their share buyback program to $70 billion. The dividend, as I figured out, it's going to be, if it's about 80 cents a year based on 20 cents a quarter, it's probably going to, based on, I think I based it on trailing earnings, it's going to be probably roughly the size of Apple's in terms of their dividend payout. So again, they're now a technology company that happens to pay a dividend, but still it's something to reward investors.
Right. I mean, it's a bonus for sure, but it's a little bit of smoke and mirrors. The dividend about 0.5% yield, I think. Which is, it's not nothing, but it's not really a lot. If you're looking to buy the stock for a dividend, go somewhere else. What it does do is help increase the ownership. A lot of funds can only own funds that pay dividends. So now they're all opened up to Google. That might be part of this rush in prices. And the repo, again, too, good, but it's not awesome. 70 billion is a lot of money for me and you, but it's only like 1.75% of the market cap because it's divided between Class A and Class C shares. It's not all going to one share group, so it's good, but it's not a tailwind to drive the stock 10% higher, especially when I see in the results this is just ongoing business. It's not AI is still not really like bloomed for Google yet.
Now, this earnings have not been a problem for Alphabet. Same was true in this earnings report from them. They reported a significant earnings beat this quarter. Can you tell us a little bit more about those numbers quick?
Right. So revenue wasn't that much of a beat on the top line. On the bottom line, they posted $1.81 in earnings per share. That was 26% higher than estimates, and it was 54% higher year over year. So again, earnings, not a huge problem here for the company going forward. That was never really a concern for investors going into this.
Right. And actually, those results were really not that surprising given Meta, because Google's core business kind of aligns with Meta's. They're about traffic and ads. And so this revenue is all about search and YouTube. And then the margins are about cost control. That also kind of aligns with Meta's story. They've been leaning into efficiency, and that's driving results more so than like the rise of AI.
So the first quarter of 2024 has been a bit of an eyesore for the company. I mean, they debuted their Gemini generative AI model to some criticism, as you mentioned in your article, Chris, but the model produced some historically inaccurate images. So can you tell us a little bit more about the concerns with this company? How do they plan to maintain leadership in AI technology? I mean, Alphabet is taking measures to cut costs while they're also increasing capital expenditures, particularly in AI, of course. So kind of, if you would, tell us more about these. How do these decisions reflect their operational priorities, and maybe its balance between growth and profitability here?
Sure. And Thomas alluded to this a little bit earlier. So the growth in the earnings report really came from their core businesses. It came from their search. It came from YouTube. It came from the cloud. Of those three, only the cloud is really being impacted by their AI investments right now, and AI is helping to drive the growth in the cloud. As they move forward, they're expecting AI to be a much more vital part of all of their core businesses. That's what they're saying to justify the AI spend, which they say they're still a leader in. That was brought out on the conference call last night. So one of the interesting things to watch for investors will be to see how Alphabet positions this. If AI starts to take over a larger part of their search business, that could also start hurting their ad-driven business, because because they'll be making less money from the ads because the AI will be taking over more of the search component there. But this is a tightrope that they're going to be walking. But again, the company still believes that AI is where they're going to go, and it's going to drive that core business over time.
Right. I wouldn't think that Google had backburnered AI, but they might be taking a less front-footed approach with it, after their missteps.
Right.
Speaking to the cloud, it's like 10% of the business right now. So it's not huge today, but it could grow to become huge. I mean, look at Amazon. AWS is like 15-20% of the business now, I think. It's definitely growing. But like also Meta and Microsoft, they both announced more spending on AI. So Google's plans to increase CapEx aligns with that. So again, it's just a future story and not really a today story for AI and Google.
Now, you kind of touched on this with your responses there, but so we've seen this kind of focus shift from moonshot projects in favor of more immediate growth drivers for Alphabet. So how do investors kind of approach this and kind of that balance of innovation with profitability?
Yeah, in my article, I described it as, learning how to walk and chew gum at the same time. For people who like the movie, I'll use a Happy Gilmore reference. This is about Happy learning how to putt, and Meta did it in 2023. Right. They showed investors that we don't have to just be all about growth. We can also do the cost-cutting measures. We can eat our vegetables. We can do the things that profitable businesses do. Right. And Google's showing some of the same things in the current quarter. They're doing the cost cutting. They're reducing headcount. Now, some of that might be because they're replacing those jobs with AI, but still they're showing that we can do some disciplined cost cutting, and it doesn't all have to just be about growth all the time. That's going to be the balance that I think a lot of these companies are going to be doing. You just saw it with companies like Microsoft and Meta first, and I think you're going to see a lot more follow suit.
Yeah, I think what Chris is talking about is kind of an idea that I have where there's two stories in tech right now. There's the maturity of the legacy tech market. And for the legacy tech market, the days of big wild growth are over. So there's not going to be a lot of spending just to acquire growth, and that cash flow is being shifted towards capital returns to help increase ownership and reduce volatility in the stock. All those things attract new investors. And the second story is the budding AI. And right now, what we're seeing is some companies are really doing well, and some of them, which should be doing well, aren't doing as well as they should. And that's kind of like where Google is, trying to establish its place in the AI world, where right now it's being dominated by NVIDIA and Microsoft, and to a lesser extent, companies like Oracle.
Yeah, I think it's not so much that it's, again, AI is here to stay and it's a real thing. But I think, yes, to the point that Thomas was making, investors aren't just going to reward companies because they're investing in AI. Investors are now saying, we want to see how AI is impacting your bottom line. And right now, Alphabet doesn't necessarily have as much to show on that. And so it makes sense for them to also be saying, we're going to reward shareholders in other ways.
Imagine investing in the next big stock before it hits its peak. Our exclusive report, 7 stocks that could be bigger than Tesla, NVIDIA, and Google, introduces you to the growth stocks set to skyrocket, offering unmatched returns for your investment. These aren't just any stocks, they're the carefully selected potential market leaders of tomorrow. Download this free report now to discover the next big superstars. Is there anything else that investors need to look for in this stock looking ahead as we go into 2024?
I touched on it earlier. I think it's going to be the continued integration of AI into Google search. I think that'll be kind of an interesting thing to watch. I think, there are some regulatory concerns. The U.S. Department of Justice is looking into Google as far as, did they sign unfair contracts that are giving them a competitive advantage. Those will be things to watch. But I think really it's going to be more of the same for Alphabet. It's going to be showing investors that they can actually, do both the growth and the shareholder value thing over time.
Well, thank you everyone for joining us today to unpack Alphabet's earnings report. Stay on top of this stock with us right here at MarketBeat. We'll have all the latest news for you. Leave your comments for us down below. Otherwise, we'll see you in the next one. Thanks, guys.